Good morning, everyone. Today, our auditor discussion group consisting of four of us. Myself, Wong Howie, and my metric number is 15DAT23F1037.
Hi, my name is Nur Safura binti Wali Akbar and my matrix number 15DAT23F1043.
My name is Sadatul Syuhada binti Syaizam and my matric number is 15DAT23F1047.
Hi, my name is Krishantri Shankar. My metric number is 15DAT23F1023.
Today, we will be discussing two ethical dilemma scenarios involving auditors. We will evaluate which ethical principles are violated, what action should be taken, and how ethical traits are present. We will also propose solutions while referring to the relevant auditor standard and professional codes of ethics. Let's begin with the first case involving Mega Trend Berhad. First of all, what professional ethical principles are violated in this scenario?
Alright, the first ethical principle violated is integrity because the company recorded fake invoices to inflate revenue. Recording fake invoices is basically dishonesty. By inflating revenue, the company is misleading its shareholders, regulators, creditors, and even Bursa Malaysia. Integrity requires truthfulness and accuracy, and this behavior clearly goes against that.
I agree. And the second principle is objectivity. When the CFO offer the auditor a friendly offer of reward and future projects to ignore fraud, it creates an undue influence threat. It compromises independence in both fact and appearance, which is very dangerous. In fact, this compromises independence and creates bias. Objectivity is lost when personal gain influence decision.
Also, professional behavior is violated because pressuring the auditor to hide fraudulent activities will damage the public's trust in auditing profession. It discredits the reputation of accountants, which is strictly prohibited by the ethical code.
Exactly. Recording fake invoice are breach of integrity. Rebellion attempt is breach of objectivity. Persuading concealment is breach of professional behavior. These are serious violations. Do you think confidentiality is involved?
Not directly. In this case, the problem is not about leaking information, but about misreporting. So confidential is less relevant than the other three.
These three principles fit the scenario best because confidentiality or competence are not the core issue. The main issue is dishonest, influence, and discrediting the profession. Do you all agree?
So yeah, we all agree about that.
Okay, moving on. What should Mr. Kola do as a professional auditor?
Alright, for me, firstly, she must refuse the friendly offer made by the CFO because as accepting it will compromise her objectivity and independence. So the Code of Ethics states that auditors must not accept gifts or rewards that influence judgment.
Yes, as Safura said, she should clearly communicate to the management that she is ethically and professionally bound to report any misstatement or fraudulent activities identified during the audit.
Yeah, I agree. Secondly, she should also gather sufficient and appropriate audit evidence. According to ISA 500, she needs to perform extended testing to identify how many invoices are fake and verify it if the misstatement is material.
For my opinion, this ensures that her conclusions are based on reliable audit evidence and comply with the auditing standards.
She should escalate the matter to those charged with governance under ISA 260. That means reporting to the audit committee and the board if management refuses to correct it.
Yes, this step protects her professional reputation and complies with the Auditor's Duty Act in the public interest.
Alright, so for me, additionally, she should consider the impact on the auditor opinion according to ISA 705. If the misstatement is material but not pervasive, she could issue a qualified opinion. But if it's pervasive, and then she should issue an as adverse opinion.
And if management continues refusing correction, she may even withdraw from the engagement and consider reporting to the regulators because the client is listed on Bursa Malaysia.
Good point. For listed entity, the responsibility is higher.
Okay, alright. In auditing, it's important to maintaining professional ethics in conducting an audit. Maintaining ethics preserve public trust. If the public believe auditors can be bribed, the entire financial report system collapse.
Alright, also, ethics strengthen professional skepticism. Without ethics, auditors will not challenge management representations. Ethical adherence, especially objective and independence, allows the auditor to perform their duties with professional skepticism and integrity, leading to a high quality and unbiased audit outcome.
Okay, the ethical principle of integrity and objectivity underpin the auditor's requirement to maintain professional skepticism. The skeptical mindset is crucial for criticize evaluation evidence, questioning management representation like the CFO's statement regarding the fake invoice, and identify material misstatement or potential fraud.
And ethics ensure compliance with standard and regulation, which is prevent legal consequence and protects users of financial statement.
Alright, so besides that, professional ethics provides the foundation for auditor independence in appearance and in fact. So maintaining independence is paramount as it ensures the auditor can act without being unduly influenced, for example, by the CFO-friendly offer, and can issue an honest, unbiased opinion on the financial statements, thereby serving the public interest.
Yes, I exactly agree with you all. Ethics are the backbone of the auditing profession. This ensures the audit is conducted in accordance with approved auditing standards and relevant legal regulatory requirements like those governing fraud and financial reporting, making the audit legally sound and technically correct. Now, let's move on to scenario 2, which is much more complicated. The subsidiaries secure our overseas contracts, but there are unidentified payments and repeated environmental penalties. Which principles are relevant here?
Alright, so again, of course, integrity is clearly violated. Integrity requires accountants to be honest, transparent, and straightforward in all professional work. But large unidentified payments were made to individuals linked to foreign government departments. So this indicates possible bribery or corruption.
Yes, I agree with you, Safura. Environmental penalty charge were intentionally misposted under cost of sale to hide repeated breach. Purchase order instructed by the finance or director cannot be traced to approved supplier, implying fraudulent procurement transaction.
Okay, lack of transparency is procedure documentation undermine truthfully reporting. They are involving self-interest treat which company benefit financially by hiding breaches.
For me, I think it involves intimidation treat because staff pressure by finance director.
Alright, so therefore, integrity is compromised because financial information presented to stakeholders does not reflect true conditions. So without honesty, financial reports become misleading and investor cannot make informed decision.
Yeah, also, the credibility of the audit firm and the profession will be damaged.
Secondly, objectivity is involved because the finance director pressure staff demonstration intimidation treat. Payment linked to officials may influence decision-making unfairly. Suspiciously, payment may be intended to obtain contract unfairly, impairing fair judgment. Unapproved supplier purchase orders such as favoritism or potential kickback.
Alright, so also, auditors have been auditing this company for 3 years, which introduced a familiarity trait.
I think it involved familiarity trade because the same group audited for 3 years.
There are also intimidation traits which staff get pressure from management. Auditor must remain neutral and independent. Otherwise, financial reporting cannot be trusted by shareholders, regulators, and lenders.
The third principle is professional competence. Director failed to take corrective action and the company keep breaching environmental laws. This shock loss of due care and poor internal controls.
The management did not take steps to stop non-compliance, shows poor internal control and missing tender or bidding timeless indicate weak document control. Poor documentation of bidding process indicates weak control over procurement documentation.
Moreover, the company ignored regulation to reduce costs and they increase the short-term profit, show self-interest occur in the company.
Yeah, it shows self-review trait as the auditors may feel pressure to justify past clean opinions since this behavior wasn't detected for 3 years. So auditor might unconsciously defend previous work rather than report new issues.
Yes, I agree with you, Safura.
And lastly, professional behavior. Professional behavior requires complying with law and regulation and avoidance of action that discredit the profession. Misclarifying penalties to cost of sale is intentionally misleading. Also, bypass supplier approved listed and overriding control discredited the profession.
Alright, so breaking environmental regulations repeatedly suggests intentional disregard for the law. So hiding penalties under cost of sales misleads users of financial statements. Auditor may be pushed to help present the entity positively to external parties, but indirectly promoting illegal behavior. So this show advocacy trait.
Intimidation threats are ongoing too. Staff are instructed to hide information from auditors.
Yes, if professionals participate in concerning illegal activities, it tarnishes public trust in accountants, auditors, and corporate governance.
Yeah, I think you all are right. Next, let's identify relevant facts that show that this is a serious ethical issue.
Alright, so there are large unidentified payments linked to individuals in foreign government department. So that strongly suggests bribery. This is the most serious fact, strongly indicating a potential violation of anti-bribery and corruption laws, a major instance of non-compliance with laws and regulations or not clear. So the payment suggests that the contracts may have been secured through illegal means, which carries several legal, financial, and reputational consequences for both the subsidiary and the group.
Okay, next, purchasing orders were raised that could not match to approved supplier list. That indicate control override, and also this highlight a control override by senior management and deliberate effort to conceal the true nature of transaction like the corruption payment. The financial director is actively bypassing internal controls to facilitate questionable activities which underdetermine the reliability of the subsidiary's financial record and internal environment.
The subsidiary repeatedly breached environmental regulation that shows system non-compliance. This reveals a systemic failure in the subsidiary's operational compliance and control environment. The fact that the breaches were repeated demonstrate a deep-seated lack of commitment to legal and ethical compliance, indicating a poor ethical tone at the top regarding regulatory responsibility.
Moreover, the director failed to take appropriate step to stop this happening repeatedly during the audited period, despite the significant penalties. This signifies a critical failure in corporate governance and management integrity. The director unknowing allowing the subsidiary to operate illegally which is not only exposed to the company to ongoing legal risks, but also suggests a discredit for their fiduciary duties and a lack of competence in overseeing operations.
Alright, so then the finance director instructed staff to post the penalty charge to the cost of sales to hide the fact from the auditors.
Okay, this is an act of fraudulent financial reporting by classifying significant regulatory penalty as professional costs like cost of sales. The financial director deliberately aimed to devise the auditors and the other stakeholders about the nature and also scale of the environmental non-compliance. These materially misstated the financial statement.
Yeah, this fact clearly indicates several ethical and legal problems.
Alright, so finally, what do you guys think? Who should be involved to resolve this?
I think first the audit partner, ethics partner and legal counsel from our audit firm must be consulted immediately to determine the firm's statutory and professional obligation. This is too serious to handle alone.
Okay, secondly, in my point of view, accelerate the finding of those charged with governance, such as audit committee and the board of directors of the parent company.
Yeah, as this finding concerning fraud and non-compliance must be escalated to the audit committees and the board of directors of the group, which is parent company.
Right, so moreover, we need external legal counsel because there may be international corruption implications.
Okay, fourthly, if those charged with governance fail to take appropriate action, the auditor may be required to report to the regulatory or enforcement bodies such as MIA.
Fifth, a forensic accountant should investigate the unidentified payment to quantify the extent of wrongdoing.
I think the internal audit department of the parent company should be involved identifying whether this problem occur elsewhere or in the group. Do you think the board might need to reconstructing?
Yes, possibly. They may need appoint an independent director with expertise in ethicals and compliance.
As the fact that the director of the subsidiary failed to take appropriate steps to stop the repeated breaches of environmental laws such as a potential failure in governance. So, appointing a new independent director is required.
Yeah, I think it will help strengthen governance and reduce future misconduct.
Yeah, I agree with all of you. To conclude, both cases demonstrate how ethical behavior threatens independence, objectivity, and public trust.
Auditor must apply professional skepticism, gather sufficient evidence and communicate with those charged with governance.
Ethical traits such as self-interest, familiarity, and intimidation must be exercised and mitigated.
Alright, so by following the code of ethics and auditing standards, we ensure compliance, and credibility. So,
I think that's all. Thank you.
thank you
Thank you.
everyone.
Thank you.
Thank you.